I'm excited to welcome our guest today, Shawn out of Boyertown, Pennsylvania. Shawn started his YouTube channel, Reserved Investments, in the year 2019, and he now has over 9,000 subscribers who appreciate his content on the collectibles market. He's been involved in the antiques and collectibles trade since the age of 12. He started collecting comic books, coins, video games, and hanging out at flea markets and auctions as often as he could. When he started driving at age 16, he could finally go to local flea markets almost every weekend, where he became acquainted with many dealers and collectors. In 2010, Shawn was dealing in vintage video games primarily, and eventually started writing articles for Antiques and Auction News and doing consulting on the side. This brought him to starting his YouTube channel in 2019, where he grew his subscribers to over 9,000, people who are looking to get more information on the collectibles market.
There's a lot of people that are coming into the market that don't know any better. They're either coming in due to emotional attachment, meaning they really love this stuff, and as a result, they're allowing that emotional attachment cloud their judgment. And what's happening is they're unfortunately overpaying because they're paying out of their emotions rather than with logic. On the other end of the spectrum, you have people that are actually afraid of traditional asset classes, stocks, bonds, mutual funds, ETFs, just because of what they've been through the 2008, 2009 financial crisis, even what would happen during the Corona crash with the pandemic that we just saw, where the market kind of took a dump there for at least a couple of months to a year, where the market was in uncertainty. There's a lot of people that are really scared over traditional asset investing. So what I'm seeing is there kind of is this merging of, well, I have a passion towards these items. Why not invest in these items and allow it to serve both purposes? And unfortunately, that's fine if you're going to put like 10, maybe 20% of your net worth into collectibles. But unfortunately, we have people right now that they have $20,000 worth of school loan debt. They have $20,000 worth of credit card debt. They have a car payment and a mortgage, and they think that investing in collectibles is a fundamental foundation for building a net worth. And in all honesty, it's very dangerous. And those are the people that I worry about the most. So on my channel, I kind of coined a phrase to describe that. And that's the Timmies and the Kimmies. It's people that don't know better. And then there's also Poindexters, people that come into these markets just because they see other people doing it, or they log on to YouTube and they see a lot of these hype-driven YouTube channels where people are propping up the value to this stuff, and they think that's realistic and they want to be a part of that. So they're really not sure how these markets work, but they're doing it anyway. They're your Poindexters. They're just following the trend. So that's pretty much how I describe those groups of people.
What are the risks of investing in collectibles? You mentioned maybe a 10% allocation of your net worth to collectibles. That seems like a lot, but what are the risks if you were going to diversify your net worth into something that you were really passionate about? Maybe it's comic books, let's say. What are the risks?
The thing you got to understand is there's no real fundamentals when we talk about intrinsic value in the collectibles market. It's not like where you can analyze a stock. You can analyze a bond, you can look at the fundamentals, you can see cash flow, you can see the debt of the company that you're thinking of investing in. When we talk about collectibles, the entire antiques and collectibles trade is built upon speculation. That's pretty much the name of the game. You're assuming that if you buy item X for, let's say, $1,000, if you go to sell it in 6 months, 5 years, 50 years from now, you're assuming that someone's going to come into the market and they are going to pay you more than what you paid for that particular item. That's what you're doing when you are investing in these markets. Now, this is risky because a lot of people don't analyze cost of inflation. They don't analyze opportunity cost. They don't analyze the true time value of money when they come into these markets. And right now, what we're seeing is there's a lot of people that are not well versed in finance or economics that want to invest in antiques and collectibles. Because, like, going back to the point I made before, they're scared of the overall stock market. If you don't even understand at least the basics as to how the stock market works, the collectibles trade is much more risky because it's not regulated in any sense of the term. meaning there's a lot of markets out there where people are coming in who have the means, they have the money, they have the education, and they have the backing where they can come in and they can manipulate these markets behind the scene. And they can pretty much cause these markets to go exponentially higher in the short term. They can sell off their holdings and they can walk away with a lot of money while the market takes a downturn because they pulled out. That is a substantial risk that you have in alternate assets like antiques and collectibles. And as a matter of fact, as we're doing this particular interview, right now there was an expose that was just released that I was kind of part of that went behind the scenes of video game grading, video game collectibles, that is causing a lot of waves on the internet right now because there's a lot of market manipulation happening in that segment of the collectibles trade. And it is quite risky if you're putting like $5, $10, $15, $20,000 in an item just because you have an emotional attachment to it and somebody's telling you, well, it's rare. You really have to do the research and go, okay, how rare is this item? How quickly did this item accelerate in value? Are we talking an item that I could have got 6 months or a year ago for like $2,000 that is now selling for 20 grand? Well, what market fundamentals are causing the price to rise that quickly over that short time period? It's no different if you compare this to stocks. Certain stocks that go up like that, usually you got to look, okay, what were the earnings? What's in the 10K report? What's going on here? Why is this stock trending to where it is today, or even cryptocurrency? You have to look beyond the basics and try to analyze what's happening in the overall market. And that's a risk that I don't think, or I should say a skill, not really a risk, but it's a skill that very few people have in the overall trade.
I want to talk about cost. Let's talk about all the costs, because when we look at investing in a mutual fund or an ETF or a stock these days, the costs have really come down. There's been a lot of compression of costs. What's it look like in your industry in collectibles? Give us a little 101 on fees and expenses.
This is something that a lot of people don't analyze, unfortunately. It's very easy to buy a collectible. All you do is log on to eBay. You can log on to Heritage Auctions, Comic Link, Morphe's Auctions, Sotheby's, Christie's, any of these auction sites. And all you got to do is click the bid button or the buy button, and you can pretty much buy something today and get it shipped to you as long as you pay for it, and it'll be at your house within a week. It's very amazing how the industry works, going back to talking about the internet and how it transformed everything. The problem is there's a lot of people that are doing that, but they're not looking at the cost to own, maintain, and also sell that item back into the market. And that's where I come in. First of all, depending on how much money you're spending on antiques and collectibles, there are going to be some possible storage and maintenance costs, number one. And number two, you're going to have insurance costs. There are specialty insurance companies that do cater to the antiques and collectibles trade. Now, again, this is all relative to what you're buying, what you're investing in, how much you're comfortable risking in these markets. The major cost, though, that I don't think that people realize outside of the time value of money, because remember, if you go to the market today, you buy a collectible for $5,000 and you hold it for 10 years. And even if you sell it 10 years from now for $5,000, with the cost of inflation and the time value money, you know yourself, you lost money overall if you were doing that from a financial standpoint. So the other biggest expense you had is the expense ratios when you sell back into the market. You're right, mutual fund, index fees, ETF fees, they're a fraction of a percent right now in certain cases, depending on what company you go through, whatever. But when you talk about collectibles, when you invest in collectibles and you sell to an auction company or you sell through an auction, you pay a commission in the form of a seller's premium. And that can be anywhere from 5 all the way up to 25%.
Wow.
And on the other end of the transaction, when a buyer, if you go through like a major auction company and you can sign something, when the buyer buys that item, they pay a commission as well, known as a buyer's premium. So what a lot of investors don't realize in this market, when you go to sell a collectible, if you want to go through a top tier auction company, in certain instances, they're going to take 40% from you and the buyer congruently.
Got it.
What does that be? Upwards of that. Now, there's ways to negotiate it. There's ways, like if you have a $1 million item, you something really rare that they want, yeah, they may waive the whole seller's premium for you.
Wow.
But rest assured, the auction company is still going to make money on that sale. And it's not going to be anywhere near the expense ratio of an index fund, an ETF, or even going through, you know, a broker and buying whatever XYZ shares of stock.
Yeah.
Liquidity is always something that you have to be aware of. If you're invested in, let me use this as an example, certain markets are not where they once were in the overall antiques and collectibles trade. Like if you if you grew up in the 1950s and 60s, you have a different perspective of somebody like me who grew up in the 1980s and the 1990s when I was in high school. For instance, my generation right now and younger generations are kind of obsessed with like video games, a little bit of superheroes, certain vintage toys, items of that nature. Whereas if you grew up in the 50s or 60s, Western collectibles, Marx play sets, if you know what Marx Toys, if you ever heard of that company, Lionel trains, Pez dispensers, all that stuff was very popular. Well, in the 70s, 80s, and 90s, that stuff was very liquid. You could go to any dealer and they would allow you to convert that to cash because they wanted it because they always had a buyer.
Yeah.
Today in the year 2021, Lionel train sets, Western toy play sets, items of that nature, it's not really moving. It's not the hot commodities. Now, it's true, there are certain, I'm going to use a term here that I really don't like, blue chip or evergreen collectibles like coins, certain historical documents, items of that nature that have stood the test of time where there is a market, regardless of whether you collected them in the 40s, 50s, 60s, 70s, 80s, or even today. Coins are one of those markets where it's very liquid because it's such a massive collecting field that pretty much dealers occupy that market. People want to invest in that market.
Mm-hmm.
But overall, most collectibles are not like that. Most collectibles hit a boom, they hit a peak, and then they level off. And that's what we're seeing right now with a lot of pop culture collectibles, even like comic books you brought up.
Mm-hmm.
I am not really dead set on the future of comic books as collectibles because younger people are just not going to a comic book store and they're playing video games, they're doing other stuff. They're not reading comic books like they once were. So I keep telling a lot of my older collectors that are like 10, 20 years older than me, I'm like, what are you going to do with this stuff? Right now, prices are soaring. You should be selling into the market. And I can tell they have a very tremendous emotional attachment to these items where they don't want to sell. And I'm trying to tell them, yeah, I'm not saying the market's going to go to zero, but right now we're seeing some pretty impressive prices being paid for this stuff. If you want to take advantage of it, don't sell the whole collection. Sell like 50% of it or pick out some items that you want to keep and just sell the rest and take that money and just put it in the real estate or mutual funds, stocks, bonds, whatever. But don't keep it in the collectibles. And a lot of them don't want to hear that. And unfortunately, what we see over time is when people don't take that advice, when they do get ready to sell in their old age, sometimes the collecting market is no longer where it was at or where it once was. And when that happens, that's when you have a problem with liquidity because people in their mind, especially if you have emotional attachment to these things, well, I remember when this item was $10,000 and now it may be selling for $2,000 in the open market and they don't want to take the loss.
One of your YouTube clips, you discussed how some collectibles are temporary fads while others are timeless. So is this a lot about the blue chip? I thought it was interesting that you don't like to use the word blue chip, but for me as an investment advisor, I kind of like that. I want to invest where you say it's blue chip. So elaborate a little bit more on that.
A blue chip collectible, again, I don't like the term because it gives a wrong kind of connotation to the item in question where people think of it like, oh, this item's going to always go up in value. But there are certain collecting categories that are so strong in the overall market that people have been collecting them for many generations. We call them actually multi-generational collectibles. If you look at certain antiques, even if you look at coins, currency, first edition books, certain historical documents, firearms is a good example, edged weapons, anything that's historic. Like if you have something that was signed by George Washington and it's legit, that would be an example of pretty much, you can't get any better than a blue chip collectible than that. Let's be realistic.
Yeah.
So there are certain things that are closer to that definition than others. The things that you do have to watch out for are kind of like the fad items. The items that most people grew up with as toys, as items that they relate it to, most likely future generations, with few exceptions, are not going to gravitate to those same items. You know, I talk.
So tell us about the future of collectibles. Where do you see the market going?
Well, I certainly hope NFTs don't become a mainstay thing. I think in a certain aspect they are, but I don't think it's going to be where people are paying X hundreds of millions of dollars for a piece of art, like we saw with Beeple's art that sold for like 69 million. I
Yeah.
think that was the market getting ahead of itself a little bit there. I at least hope that that's not going to happen, because I think one of the joys of collecting is being able to hold and own something in physical form.